really a pleasure to meet all of you, and glad that all of you are here. So quickly, my name is Amol Dethe. I have been working as a finance journalist since last 15 years, worked with CNBC, Z, and now working with ET, heading ETBFSI.com and ETCFO.com. The focus of ET is very aggressive into the digital formats. And what we have done is, obviously we have one common website, but the idea behind having a portal or a news portal for every particular segment is so that we can cater to that particular segment in a far more diligent manner. So the ETBFSI.com covers the BFSI segment at length: banking, finance, insurance, NBFCs, fintech, far more aggressively. And I can proudly say, since I'm an editor of this portal and I started almost 3.5 years back, that the kinds of stories on the fintech and the banking and NBFCs or insurance that we do at BFSI, no one does it. In fact, today only we did a wonderful show specifically. It was a live show on LinkedIn, Twitter, and all social media platforms on whether the fintech funding winter is real. And I can share with you that most of the investors said, yes, it's real. Now the question is how chilling it is. But so that's how. So we do lots of news stories. I would advise all of you, by any chance, if you're not subscribed our daily newsletter, please do that. We do lots of stories every day. And I can, assure you one thing, that if you open our website or maybe read our newsletter every day in the morning, perhaps you do not need to look for any other media house to understand what's happening in the BFSI space. So that's ETBFSI, and same is with many other portals that we have, like ET Auto or ET Retail. They cover their particular domains. So at ETBFSI, we, apart from the content, we also do some knowledge sessions like this, or we also do maybe events, maybe once in a quarter or once in 6 months, where we invite industry speakers and talk. So the idea behind such knowledge session is to discuss maybe one topic in a detail and put it on the website as a webinar or a content video platform, and we discuss one topic in a far more detailed manner, and there we invite people like you so that we can get good content out of that. So this is what, and today's topic is basically about, the customer journey is one of the important topic. That's what I have been learning since last 3 to 5 years, specifically since the fintech came into the picture. The one story which every BFSI player is selling is the customer journey and the customer experience. So we are talking about how to accelerate end-to-end customer's journey with digital solutions, or maybe call it agile solutions. In fact, I'm kind of scared with these words like resilient, agile, disruptive. I have told my team to find alternatives to these words. But again, these are the words which actually reflect anything and everything that we do. So let's begin with, we started on time and we'll try our best to finish on time. So let's begin with basic introduction from each one of you. So that everyone knows each other, and before we start the conversation. So Mehka, would you like to go ahead, and then we'll go this way?
Yeah, sure. Hi, everyone. I'm Mehka Oberoi. I represent IIFL. I am one of the directors in IIFL Open Neobank. It's a new venture that we have announced in collaboration with Open. It's a joint venture entity that IIFL has set up for the neobanking space.
Hey, hi, everyone. Good evening. My name is Rupam Mazumdar. So I'm the digital product head of Edelweiss Financial Services. So let's hope that we have a good conversation out there.
I'm sure, absolutely.
Yeah. Hi, I'm Haryaksh. I'm the Chief Data Officer at Aadhaar. Just wanted to sensitize the group here. We are in the pre-IPO silent phase. So I am here in my personal capacity, and nothing that I am sharing here is representative of what Aadhaar stands as a company. It's my personal opinion.
Sure.
So hi everyone, I'm Dipesh, co-founder and CTO of Lending Club. We're an online platform or a marketplace for peer-to-peer lending.
Sure. Sangram.
Hi everyone, my name is Sangram. I head products at Ugrow Capital, and I look forward to having a very interactive session this evening.
Sure.
Hi, this is Samir Mohanty from Avanse Financial Services. I play the role of Chief Transformation Officer at Avanse. Avanse is predominantly an education-focused NBFC, predominantly looking into all aspects of education, right? Whether it be funding schools and colleges or the students or on the digital education side. So basically our objective is to democratize education, make education available to every needy child, and that's what we've been doing for last 7 to 8 years. Thank you.
Sure.
Hi, I'm Nikhil Carvalho. So previously I was the head of digital experience at Fast Housing Finance, and now I'm the head of IT out there.
Sure.
Hi, I'm Rohan Shenvi. I'm from Newgen. So basically into lending consulting, basically. So from a pre-sales perspective. Yeah.
Okay. Sure. Thanks. So thank you, everyone. So good to see a diverse panel, must say, or a segment here. Somebody's from housing finance, education, neobank, and fintech and emerging sectors. So my basic question is basically, how has customer expectations changed over the last 3 to 5 years? Because pre-pandemic, we were still assuming that, the customers are expecting this. But during pandemic, we all realized that online is one of the biggest tool. And now we are trying to build the hybrid model is what my observation is from the industry leaders like you. So Mehka, I will start from you if you want to add, and anyone wants to add. I mean, let's not have a question and answer round as such. That's why I called it a discussion points. And anyone wants to add. So basic to start with, how has customer expectations changed?
So I think one thing that we're seeing, as you rightly highlighted, right, hybrid, post-pandemic, it was like mostly digital, let everything go digital. And we would want to get into digital. Customers are adopting to digital ways of doing things. Specifically in the financial services space, a lot has evolved in terms of the way they are consuming services. Digital has become the way forward, but there are certain areas where they still need assistance. So, if we talk about lending, that's one space which has become digitized over the last 1-2 years. You will see many fintechs trying to digitize it. And many banks and financial institutions have also moved to a digital way of giving a customer an experience that you have a complete digital journey on the way of consuming that service. But they still need assistance, right? So if you talk about tier 3, tier 4 services, they would still want to have a touch point with an entity to know what that entity stands for, to understand what is the kind of customer experience or any kind of grievance that they have that you can solve for. So that aspect and that touch point still remains. Even if we talk about services like, advisory services, financial advisory services, the way they have been consuming content today or deciding on which advisory they need to go for, that has all moved online. Today, you wouldn't have a single customer not searching online before making any investment decision that he wants to make. He'll go on a website, he will try and search for various options which are available, and only then would he want to talk to an advisor to finally arrive at what he wants to do. Gone are the days when they used to just blindly believe on one advisor trying to tell him everything. He would want to look at all digital sources possible. But at the end, he will still go to an advisor to probably take the final call. So that kind of a hybrid model still exists, with a lot of focus being on digital. So I would say digital is probably 80%, and your last mile to get the customer to actually become a customer is that 20%, which is being driven by still a physical touch point or a human touch point being there to ensure that he ultimately becomes your customer. And in terms of reach also, right, I think for a lot of time we've been talking about financial inclusion, and India has seen a lot of improvement in financial inclusion. But for tier 3, tier 4 towns, still a touch point becomes very important for them to understand what are the kind of services which are available while you still give it to them digitally.
Right.
I think that's how.
No, sure. I think quite meaningful. Anyone wants to add here? Samir?
So I think a couple of other factors. Obviously, COVID has played a major role because mindsets of people have changed. And the kind of audience we deal in, they are extremely tech savvy. We deal with students, and their approach is mobile first. And their adoption rates are tremendous. And of course, COVID has helped us a lot. But a couple of other factors that has also added, regulations have become more favorable towards, and when we live in an NBFC world, regulations play a very major role. They've become favorable. There's a lot of encouragement happening there. The other piece that is happening is internet penetration. I mean, today, if you have to reach out to the parent of a child, it's all because the internet penetration is so good, I'm able to reach him out. As Mehka said, while digital is there, the physical model is still going to remain. So we call it phygital, actually. So I'm running close to the parent, but yet digitally be present. And the model that we run is definitely has to be touch and feel. So I think the demand has changed because of the mindset of the consumers. COVID has taught us a lot. the other services companies like the com services, the consumer goods services, they've taught the financial services a lot that, hey, this is still doable. And I think this is where I think financial services is having a serious rubbing effect. And that's also is helping us because people know this is doable over a phone. But I rightly agree with you, the physical model is still going to stay, and it's up to us which kind of model we want to imbibe. It also is a function of what product you are handling. Small ticket size, you can run a completely digital model, but the ticket size we run, you definitely want to be closer to the student. So there the physical model really, really works for us. But the adoption is really picking up, is what I can very clearly call out.
Okay. Sure. Mr. Ghosh, you want to add something? Because your sector is a little different. So is the, how touch and feel model will work in there?
Not just for our sector, I'll just take one step back and I would want to add on to what has been already discussed. Pre-COVID or post-COVID, the customer expectations were primarily on three areas. So one was on the exploration of options. The second one was on the onboarding side, and the third part would have been on the servicing side. Let's say if I'm talking about insurance, how do I pay my premium? If it's on the loan side, how do I pay my EMIs? So if I look at the customer expectations from an exploration point of view, the expectations have become that, I provide, let's say, a bouquet of offerings, which should be optimized or balanced in a manner that it doesn't overwhelm the customer, or it doesn't offer the spectrum of offerings. So just to give you an example, if I'm looking for a home loan, the customer is not expecting, the entire spectrum of offerings, but something similar to what he or she is looking for. So striking the balance in the digital platforms is extremely critical now as a part of customer expectations. Second part is on the onboarding side, which is, how the experience on the documentation aspects. So there the customer always wants something to be done fast. Here you can look at the difference between a customer on the liability side and the asset side. So bank customers, where it was the liability side for banks, they had been digitally savvy for a long time. All the banks have been having apps and all that. But on the so from an asset point of view for HFCs and NBFCs, it is more of a product-centric model. So there the customer's expectation will be more from when I am taking a loan, or the process is as simple and as fast as possible. And the third part is on the payment side. So here, as it was mentioned, the digital has become a horizontal experience, right? It's not that I'm looking for a home loan, so I have a finance-specific experience digitally, or I am looking for a healthcare facility, I'm looking at healthcare-specific digital. It cuts across. So yesterday's day, if you had, you look at e-commerce, when someone ordered some product in Amazon, the expectation was 15 days is fine for the product to come. Then we came to a week kind of a model. Then it became a day. It became a few hours. Now the customer is looking at a 10-minute or 15-minute, product delivery. Now that is, so when someone experiences it in the e-commerce industry, the same expectation is coming for a payment in a home loan or in healthcare or anywhere. So cutting across industries, the experience is growing. And this is augmented by even the government technology. So you look at, again, my experience with UPI payments, my experience with getting something done in UIDI platform. These all kind of contribute to the differences or changes in the customer experience. Coming to your pointed question on our industry. So our industry, the customer is not so digitally savvy. For a customer, if they're exploring for a home loan, they will not typically look at a journey, even explore digitally. Maybe the exploration will happen to a certain extent, but that is not the primary channel. They'll probably go to someone they know who have taken a loan in the past. Through that, we typically get the inbound requests. So our segment, affordable housing segment, the digital penetration has not been on the exploration side. But definitely on the payment side, we are looking at a lot of traction. UPI mandates are there anyways for payments. Plus, we are all, as in most of the companies are moving towards a digital payment kind of system for the customer service apps, and so on and so forth.
Okay.
One thing which can be completely digitized is customer service. I think that one aspect over the last 2 years, customers have also realized that when it comes to post-sale service or after the customer has become your customer service medium has completely got digitized. So one aspect within the entire BFSI industry which I think can be completely digitized or is almost digitized is customer service.
Right.
So they have become used to online mediums of communicating and getting their queries resolved. So you have bots, you have IVRs, you have ways to address what the customer needs digitally, and they're far more okay rather than waiting on a phone call for 1 hour for some customer service executive to come and attend the call. That aspect is completely digitized, and customer acceptance of that has also gone tremendously after COVID.
I think, in addition to what Micah said, the kind of product we are into, student is in US. We're in a completely different time zone. So IVRs and callings are out of the window. What remains is a bot.
Yeah.
Okay, and I think WhatsApp is emerged as one of the most non-intrusive method even in collections. And I'm telling you, our hit rate on WhatsApp as a medium to collect over an IVR is 3 times better.
Wow.
Customer response.
That's a story for me. WhatsApp
Customer response because it's non-intrusive, because you can read the message. I also get to know he's read the message. You can push him notifications. You can give him information. It can be an interactive bot. Okay, you can trigger him a link. And I think that's one area, if I have to say, which has taught us.
That's direct communication you're making.
Taught us during COVID is how do you explore it for collections? The entire piece of leveraging analytics, omni-channel approach, and WhatsApp as a medium. It's really given us a lot of, because our problem, I can't call up. I can't call up the student because he will be in a time zone which I can't.
Yes.
And plus he will be in his classes. So even during the day, parents would not know much of the things that is happening there. So that's the problem statement that we always encounter. But I think, as you rightly said, service is one area you can do it, and WhatsApp as a medium can definitely leverage because people respond. It's very non-intrusive.
WhatsApp from an onboarding perspective as well. We launched a complete journey on WhatsApp where we're giving the entire business loan experience on WhatsApp, and it has tremendously increased the conversion. So our conversion of a customer on a WhatsApp journey is 2x better than a normal web and app journey. That's essentially because you can automate the communications that's going to a customer at certain set intervals, and he can respond to when he wishes to, right? Even if he doesn't say complete the journey at one given juncture and it stops, in 2-3 hours you can remind him, look, this is where you work, and you resume your journey, and you don't need a Salesforce to kind of remind him that complete the journey.
Right.
But still, we think from an onboarding perspective, there's still a way to go. There's some assistance still needed. But reaching out to customer, getting that lead, and as he rightly said, WhatsApp as a channel improves your conversions significantly.
Sure. Yeah, go ahead, Rupam.
Yeah, so just to add to what Mehika and Samir told, just 2 days back only we launched our new pre-approved top-up loan journey. Okay. And from a lead sourcing point of view, whatever leads we got the maximum traction out of WhatsApp channel only. Okay, and our preferences were also like WhatsApp, then SMS, then email.
Right.
So typically what we prefer in our lives for mode of communication, also the customer will prefer the same. And this is giving us results. Okay. Now coming back to what digital is, see, we all say, okay, go overboard with digital also sometimes, but we have to sometimes think what is digital, okay? And digital doesn't mean that it can be a STP, straight-through process all the time. It can be a non-STP process also. Like typically Samir, he is dealing into a segment and a kind of product where he can have a full STP journey, okay? Hassle-free, within 5 to 10 minutes he can complete from onboarding till sanction at least, okay? But from our segments and all, where we primarily are dealing with SME customers, proprietors and all, in unsecured business loans, or for example labs and all, okay, the product segment, the customer segment is different, so we can't afford for a typically STP digital journey. So we go for a hybrid model, okay, where the customer experience stops from the customer point of view journey. Then there is offline journey where all the analysis, our scorecards are run, and a principal approval is given, and then post the financial principal approval, then we go for PD and other stages of approval and go for the final sanction. So it all depends on the product and the availability of data also. Like for a policy purpose, I need to check 5 things, and 4 can be like obtained from some digital sources, some online sources. Okay, but 1 can't be. So I can't compromise on the credit aspect. So I have to sort of go midway and have a hybrid sort of a journey. So everything falls into place. Although we are going aggressively ahead from the whole ecosystem perspective, you see, we are going leaps and bounds. Okay, we have now video PD solutions, where we signing e-stamping solutions. Okay, so everywhere, but still there are some areas where we can be more digital. So once that's done, then the full bucket will be filled, and then we can possibly go for less that seamless STP journeys for all the segments where possible in times to come.
Sure. So
Yeah, just to add, basically, I'm hearing all these kind of solutions, what you're mentioning, basically. So what NewGen does is, NewGen touches all these particular dots, right? One, using our low-code framework, it can touch your end customers by building portals and those interface for a kind of a straight-through STP journeys, basically, right? It also has a video KYC where, you can onboard the customers, using a video KYC kind of a mode. Plus, as mentioned, for the second channel where there's a manual intervention, there we have a mobility interface where the DSAs can go to the end customers, basically onboard that particular customers, do all those kind of validations, basically. For a non-STP journey, as you mentioned rightly, that is a backend process also on a low-code framework. So it becomes easy to connect all these particular dots, right? Whatever the expectation of the customer or whatever the expectation of the NBFCs, basically all that can be achieved using these particular solutions of NewGen. Plus, of lately, what we have also done is hyper communication or personalized communication from our CCMS framework. So right communication to the right stakeholder through a right medium at the right point of time. All these things we achieve from our customer communication journey. For example, a young generation prefers a WhatsApp kind of a communication. So we send those particular WhatsApp communications to those kind of a young crowd. Maybe elderlies or other set of customers, we can send them an email or a print kind of a communication. So all that things we cater using our low-code framework, basically.
Okay. Yeah. Sangram, you want to add something?
Yeah. So I think in my perspective, to understand why this demand is changing is there is an underlying factor. Firstly, I think families are becoming more nuclear. That is the societal impact of this entire thing. And as a result of this, people are now focused on how they spend their time compared to, when a family member would go and open a bank account or, apply for a loan and everyone would be there. So everyone used to share responsibility. With this, I think what has come up, especially over the last 5-10 years, especially, is that, a lot of alternate data is now getting mined. Now, as a result of that, people are using that alternate data to kind of establish some kind of trend or a track which helps in that decision making. And now that is one part of it. The other thing is on the experience part of it. So you find Haryaksha rightly pointed out that Amazon, the experience is now almost instant. You have Instamarts and etc. The problem is that this experience is now trying to transition almost everywhere, because if the user is in one segment, he's working on a similar model, his expectations have actually kind of got benchmarked right there. So now when he goes into a banking framework, he's expecting a similar solution there. Obviously, I agree with what has been said so far, that COVID has kind of just speeded up that entire process. But I think, it's a little deeper than all these changes. COVID has just helped speed up the entire process. The focus on, how people spend their time and the experience on all, because in COVID, as you guys would probably remember, the intensity on which we were using mobile or constantly on our laptops was very, very high. So now the comfort of even an elderly gentleman even going on a laptop or a mobile and even actually applying for a loan, which was probably unheard of at that point in time, has suddenly started to emerge.
Yes.
So I think these are some of the factors, why that expectation is now gravitating more to the digital side. My sense is that they've already got a sense of comfort, and it is going to continue. Like Samir rightly pointed out, it's going to stay digital for some point in time. But these expectations are going to continue increasing only.
True. So I think remarkable points from all of you. Let me move to the other point now. But I think quite a learning for us, because one is saying digital model will work. For Mr. Ghosh, it's going to be an exploration, work, because that's a very different segment. But and the service side, it will grow. I think remarkable thoughts here. So now another question is specifically when we talk about the digital, and Dipesh, if you could answer this, and then maybe anyone can add, is what are the current challenges that lenders, digital lenders or the new age fintech companies, NBFCs operating in mostly digital space are facing when it comes to operations? And how can digital make a difference there? Because you yourself are a very different company altogether. It's not started with a traditional mindset. You started with only mobile. That my customer is going to be on a mobile. It's not going to be on a branch. That's the model. So while building this, how do you build this? What kind of challenges do you face? And how do you ensure that the customers will get a greater, satisfaction or experience?
Thanks for the question, Amol. So I often say this in a lot of panels, right, wherein I tend to sit with other BFSI veterans and all. So, the place where the journey ends is where my journey has started. There's the fact for new age fintech companies like LinkedIn Club and all. So we started from D0 in a physical mode, from which we eventually shifted to a digital journey. So usually there is a trend in any economy. You tend to see a revolution or a jolt every 5 years or so. So if we trace back a bit, 2016-17 was when Demon created a good impact in the industry, in the entire market, right? Wherein people realized that cash is not the right way to go ahead. There will be a digital need, digital way of transacting, and people have to adapt to that, right? Later on, again, COVID triggered another wave wherein people realized that it's not just about digital, it's also about contactless. Right? So there came another trend wherein, even if something is supposed to be physical, that has to be contactless. So contactless, including contactless payment, right? So that's another thing that took up the trend. So with the kind of expectation changing for customers, you also need to innovate at a quite faster pace, right? So thankfully, the kind of innovations that we look to have as a digital lender is something that we are also getting that too in a compliant way because of the proactive nature of the government and the regulatory bodies. Just for an example, I remember that during 2015-16 when we started it, we used to actually visit our borrowers to collect about 50-60 checks, blank checks, just to make sure that they have to pay their EMIs on time. But post demon, right, we got quite a good push, and because the regulations were out for P2P lending, we got a push to get into have access to a lot of APIs like bureaus, right, like e-mandates and everything. So it's all because of the proactive nature of the government that new age fintech like us could flourish at that time. And again, back in 2022, when this contactless thing started happening, right, government tried, abruptly came back with this idea of video KYC, wherein a lot of people were doing video-like KYC of customers, right? So that was one good push that we got from the government. Beyond that, now the innovation has gone to a different level, wherein you get the entire, financial transaction history with the use of AA, right, account aggregators, right? So there are challenges, no doubt, because you don't get a comfort. The very reason we are sitting in this room is because you tend to see a person in 3D, right? So the interaction is a bit different. You tend to absorb their emotions. That's not something that you get to do in a digital mode. However, that's something I expect the likes of Metaverse will improve or innovate in the near future. But until then, there's challenges. You will not get to read the emotions of a customer. You will not get to understand much about what is the intent of with which this customer is applying. So that is one small challenge that maybe we'll be able to solve in the near future. But apart from that, I think it's just been more and more of boon that we're moving towards digital. I know there were challenges like my fellow viewers mentioned here, right? But I'm sure that will be solved. And further to that, it's also about the kind of customer sets that we're seeing here. See, earlier there were only the Gen X, right, who were, with this race of, trying something, just making waves with their life. And then came Gen Y, right, who are ready to try out anything. And then now we have Gen Z and the alphas, right, who are always looking to go into the digital mode and make their decisions on their own rather than relying on someone else's suggestions. So digital definitely is bound to be there. So there will be more and more trust, more and more, more and more confidence that is going to be built with regards to the digital journey or, digital experience of a customer. So I believe although the challenges are there, but they will not be that huge. And I believe we'll be facing a different kind of challenge in the near future.
Okay, sure. Sangra, okay, so you are also a new company, so I thought I will take your view also here in terms of the challenges. Emotion is a very important challenge that you pointed out.
Absolutely, Amol.
Yeah.
So I'll just speak specifically to Ugro Capital because we're just an MSME financier. So, what has happened is that in the retail space, you've seen a convergence of on-tap financing. So a person can walk into a store now and he can effectively buy anything he wants, either by displaying his card or, paying instantly. And it could be either through EMI. So dispensation of that credit is also in various forms. So there's tremendous amount of flexibility. But now specifically in the MSME space, there's a lot of complexity in terms of how you underwrite and understand that customer only. Okay. So for us, the challenge has specifically been around how to assimilate alternate data, like I said earlier. So we already have a scorecard engine, which is, which we call our growth score. And it's a tripod of data, which it comes from the bureau, from banking, from GST. And we assimilate that data to actually come at an overall score. So they have individual scores as well, and they have an overall score. Our scorecard took almost 2 years in the making. So luckily for us, that hard work that was initially set up, when we kind of implemented it post-COVID, now we are able to see that our application approval rates are 40% higher and our delinquencies are far lower. They're kind of stacking up in that. So one is, from an operations perspective, we've tried to streamline some of our processes to try and mirror what retail has gone through over the last 10 years. We're completely not there, but of course, having a scoring engine is also, because a lot of people are even hesitant to using a scoring engine in something as complex as this. So that's one part where, we've been able to partially crack part of, the problem of MSME financing. The second, as Dipesh has kind of pointed out, that to use that alternate data, APIs have started becoming, very readily available. At some point in time, to pull data from a bank, something as basic as a bank statement, it was a Herculean task to integrate. You would actually effectively go into that person's portal or go to the customer, tell him, you go into your portal, take a printout and give it to me. And, yes, COVID has helped, but customers are now far more willing to share that information because they kind of understand. So they become comfortable with the entire thing. So if you ask the customer for an OTP, 2 years back, he would be shocked that, this is, why would you want an OTP from me? He would not share that. And now they kind of understand the entire process. So there's a bit of familiarity involved. I think the overall, scenario has kind of changed. But the other thing is that everyone is operating in that space now. So, the APIs that we are using are also accessible to the others as well. And, the issue now is that how do you create a competitive advantage and how do you do something which is very, very different from the usual to kind of stand out and say that, what, you should prefer us as a lender. That is the entire challenge that we face on a day-to-day basis.
Sure.
And I think I think a lot here from a customer journey and operation standpoint needs to be given credit to the government as well, right? The way India's stack has essentially evolved, that has solved most part of the challenges that most of the lenders were facing to reach out to the large set of audience in order to underwrite them or in order to provide service to them. So all your identity related issues were solved with Aadhaar, eKYC, and then DigiLocker. I think DigiLocker has done a phenomenal aspect in terms of digitizing on an operational front, because one of the things when it comes to operations is how do you say that this is the right customer that has come in. And from a regulatory standpoint also, what is more important is KYC. First thing that RBI will come and audit is a KYC. Has the lender performed the KYC really well of that person? I think more than underwriting, they are concerned about whether we've done the KYC correctly or not. So DigiLocker, CKYC, eKYC. So you have a lot many options today to say that my KYC is solved for. Yeah. And like he rightly pointed out, at one point of time, getting a bank statement uploaded was a task, and now you have account aggregators. And I think account aggregator will be the next big wave for all lenders, and specifically who are trying to cater to segments which were underserved till now. GST is going to go live very soon. Right. That's a mandate which has come in with with most of the banking transaction being available on account aggregator. It has become very simpler and the customer adoption, right? Today we have almost 20 to 30% of our customers moving through to account aggregator, using account aggregator as a medium to give us bank statements. This was not the case early on, right? And the amount of drop-offs that used to happen when you ask the customer to upload a bank statement because they are not well versed specifically on a mobile first journey. It's very difficult for a customer to understand that I have downloaded the account statement. Where in my downloads has the statement gone for me to upload it? That was the biggest challenge. And the entire banking coming to you in a form of as simple as an OTP is a game changer. Right. So you just have to link your bank account, give an OTP consent, and you're done with. In fact, that helps in a lot of format, right? It helps collections also. Because you can monitor, if a customer gives you consent for a 12 months perspective, you can monitor and predict whether this customer is going to pay his EMI on time or not. Right. So that's another use case that account aggregator has. And then with GST coming in, I think today where lenders have to get into multiple integrations to get GST from one end, banking from another end, you just have to get to a single integrations. And like Sangram rightly said, that'll increase competitive intensity more, because now that most of the people have undertaken the journey of integrating multiple APIs, any new player coming in has to integrate lesser number of APIs. Because, a few set of APIs can solve for most of the challenges that he has.
So you wanted to speak about the challenges.
We are a very, very unique market. The segment that we deal in. When we underwrite a student, there is no GST, there is no bureau, there is nothing. Right. The biggest challenge we face is how do we underwrite? Because the approach that we follow is, if you have to give an education loan, you have to give it to the child, not to the parent based on his earning. And that's the challenge we handle. And we don't have anything. All of you said GST, and we don't have anything. A child doesn't have a bureau, it doesn't have a PAN at times. So the biggest challenge, that's where I think that's the problem statement that we try to address. There's one data point and that is where I think the challenge is sometimes the mother of all the kind of innovations that you do.
Samir, yours students are the ones pursuing 12 to 16?
No, they're postgraduates.
Postgraduates. Going abroad for higher studies.
They have PAN, right? Mostly.
They will have PAN, but I can't.
I may not give you much information, but this is a very interesting segment again.
So there's nothing called NTC student. So the problem is, this is the challenge, okay? And I think we operate out of.
Sorry to interrupt. I believe the bigger problem would be not coming back to India.
No, we don't want them to come back to India for a reason, and I'll tell you why. But the point that I'm trying to very clearly call out is we operate out of 17 locations, but we source out of 380 locations.
Right.
And we collect out of 380 locations. The reason is, and this is where I think analytics has helped us a lot. Yeah. And what we do is only analytics, because if you are coming to my portal and then say, hey, I'm going to University of California trying to pursue automobile engineering. Then I should be geared enough to understand in that area who are the recruiters, what is the average salary, how is it happening this time around? What is the skill set which is in demand? Where are recruiters recruiting? These are some of the things we actually build it into an analytics engine, and that's a very, very iterative piece that we do, because that's the only way for us to analyze whether after 2 years the money is going to come back or not. That's point number one. Point number two, when we do all of this, we also track how do we collect data, because data is very, very important. And I'm telling you, the biggest challenge today that I think NBFC faces, how do you uniquely identify a customer when it comes? And that is where I think that when you drive a journey, the way you collect, assimilate, and then bring it into an insight is very, very important. And for us, it's extremely important, because today when the customer comes in, I'm able to clone him. Hey, this is Samir Mohanty type student who came to me 3 years back. This is the performance. Current status is this. And that's how I'm able to offer him, hey, I can give you an unsecured loan of 60 lakhs right now on a partial interest of 2,000 rupees. And that's the product we run.
Right.
Because what we did is we completely said there's no need of taking parents' data at all. It doesn't make sense for us. It's the student who matters to us. So let's focus our entire energy on student. And then we get into collections, which is I was calling out a few minutes back.
Right.
Now, how do you reach out to him for collections? And Amol, let me tell you, we don't have a single penny of overdue customers giving us cash. It's all digital payments. Even an overdue customer, that's
Right.
And that's the segment. We're lucky enough that we're dealing with a segment that's so tech savvy that you throw up anything to them digitally, they accept.
Yes.
But if that doesn't meet their experience requirement, they don't accept, they don't adopt at all.
Yeah.
So I think the challenge, coming to your question, I think NBFCs should definitely look at the way they have to collect data, store it, and then use it for the insight. That's very, very important. And I think we realized it 2 years back. That's our biggest challenge.
And offer a hyper-personalized experience.
Absolutely. For that,
Because
you need
every
to collect data
student,
right
every
from
customer
the
is different.
You can't collect data later on.
Yes.
You have to collect data, put it in a way that makes sense for you to take actionable insights later on. Otherwise, it's a data and you don't know how to use it. So to me, I think the data is the most important part. The way you store data, collect data can bring in a lot of efficiency in the entire value chain. And we've seen
on a data board yesterday, governor, in the RBI policy said something very interesting. He said that obviously data is important, integral part, but data gives you a historical view. It doesn't show what is going to happen tomorrow. It gives you what has happened. So, and depending something on that, building something on that is...
So you are able to bring in the historical behavior, weave it in with the futuristic behavior. For example, when we underwrite a case in student, we know what are the unemployment rates.
Right.
We know in which territory what are the unemployment rates. So that is the futuristic value.
Right.
The past value is already there with you. You're able to pull it in.
Yes.
Then you bring in the co-borrowers, which are the parents, and parents are there as a comfort for us. We don't take parent from a point of view of serviceability or collateral. So I think, and we also know where to collect collateral, where not to collect. And that's where I think analytics plays a very, very bigger role for us, at least because we do use India Stack for authentication, but for financial analysis we've been still trying how can we add value to it, but it's not of use for us because of this segment that we deal with.
Very realistic. Rohan, do you want to add on the challenges part?
Definitely. In terms of, one is that onboarding, as you rightly mentioned, selecting a right set of customer, basically. Definitely more in terms of your education loan because, of those all challenges and all. So what preference what we do is we build certain AI models, for the probability of the customer to be retained or, kind of a early warning signals, basically early warning system, which, analyzes those particular bank statements and predicts, when that fraud can happen or when, default of those particular transactions can happen. So those models basically we built and we help our customers, and connect those particular dots as well. So this is how, we help our customers in an onboarding journey as well as in terms of the collection piece as well, where, and predict those particular frauds in case that happens. More towards the retail, SME and corporate kind of a lending kind of a journeys basically.
So a very important point Sangram just touched upon is like everybody is consuming the same
API. Yes.
Everybody is going through the same vision. Then where is the competitive advantage is coming from?
Yes.
Because we typically can't raise our ROIs also because we are in the co-lending market. He will know the pain. So we are all fixed there. So how I see it that we have to learn, like reduce our OPEX, our expenses. Okay, like from where I come from or where our vision is that we have a fixed operations model. Okay, there's a team, and then we are going slowly the entire model by model into digital. Okay, so rather than a fixed cost model, we are going to a variable cost model depending on the volumes.
Right.
Okay, so that is how our competitive advantage will come, because at the end of the year, every time we'll be concerned about one thing, that's the P&L. Okay, so we can't go overboard on digital and lose and bleed on the P&L.
Yeah, I'm sure.
So that is a very important point that
Yeah.
we face, especially in the co-lending sector also when we are working.
Nikhil, do you want to say something? You're quiet too.
Yeah, so I'm just absorbing a lot. But yeah, that's basically on a few points, like you said, not one size fits all, right?
Yes.
That's the key. So you need to make sure that you are catering to that customer. So example, for us, Vastu, we not only do home loans, we do LAP, then we do CB, and there's a bunch of stuff that we do. So every product you sell has a different way. You need to cater to that kind of audience. If the area, for example, if it's northern side of the country, they do not agree well to digital if you cut it via age and product, right? Because some of them want someone to come in the end, like you rightly said. Whereas in the south, we see different adoption again altogether. Again, I agree on WhatsApp, but not entirely, because again, like you said, everybody is throwing out messages. Right now, why are you not reading an SMS? Because there's clutter to it, right?
Yes.
WhatsApp is the same right now. If you see the amount of marketing messages you get, if you see the adoption that you had like 6 or 8 months ago and adoption right now, it's dropping. Just because there are so many people throwing so many messages and you keep blocking them out. So like you said again, like agility, right now you have to change. You try something new right now.
No, but I think even if you're blocking it, even if that is getting blocked, the user is reading the message. The point is, at least you know on a WhatsApp a message is not going to get.
No, I agree. I'm agreeing with you.
So that's what I'm saying. So I think it'll not go away in terms of the way you're interacting. It's about the importance that the customer wants, right? I think promotional messages might still be something that they would do away with and say, you know what, I don't want a promotional message. But when it comes to a customer service, they would want it on WhatsApp because, you know, you're getting your notifications on a medium where you're most active on. Because I don't think there's anyone who would not be using a WhatsApp today.
No, I agree with you. So I'm saying it's about what you're going to the customer for. Like if it's a collection message on a WhatsApp, that's it. Like, there's no, like it's very difficult. People do agree to do pay, but not all. Like at least a customer segment that we cater to, like the tier 3, tier 4 guys. Again, it's a product thing. Like you said, like if it all say you do onboarding via WhatsApp, right? A guy going for a home loan is never going to. You can do the onboarding as much as possible, but at the end you need to send a guy. But whereas a car loan or something, okay, TK, like it's like a 3 lakh loan, a 5 lakh loan that goes up. So again, splitting the data according to different products and age and probably location as well is something that's required.
I think WhatsApp is also getting into multilingual. There are a lot of.
I think that's one big area.
Multilingual way of approaching customers, and I still do believe, and I think when you get into WhatsApp, it's a proper consenting process. I mean, we follow a proper consenting process, and where you take the consent is very important. And you have to balance it out. I mean, you can't load them with too many. You have to send them relevant messages. You can't be sending a generic message and then expect them to respond. You have to send them a message which is relevant to them. And I think that is where I come to the point on data. Because you send him a data message which is relevant to him, he'll definitely respond.
The weird way.
Media.
Yeah.
Even if he's accepting a WhatsApp kind of a thing, send him through that particular channel. If he is wanting only an SMS kind of a thing, send him through those particular channels. So hyper automation in terms of customer communication is a key. And sending only the right set of information to the right person at the right time and through the right media. That's what, would be the future of this thing.
I believe we need to move a lot beyond that, to be honest. The reason being, see, look at the life of SMS. It started in early 2000 and today it's obsolete. I'm sure most of us have kept our SMS in silent.
Yes.
Right?
Only for OTP.
And even for OTP, I don't receive my OTP. I go to WhatsApp and SMS box and then check whether there is a OTP or not. I don't let it pop in my phone, right?
Yeah.
We've kept our phones on silent.
Yes.
So we don't want that to be buzzing us all the time, right? So Nikhil rightly pointed it out, wherein even on WhatsApp, right? I don't want, Porter or any other app to tell me, hey, you have to book your next movers or packers whatsoever, right? Because everybody's bombarding you here and there. time has come wherein customer will be pretty much selective about the kind of information that they would want to consume.
Agreed.
Right. So this is definitely going to be another digital challenge wherein even for SMSs, they have brought in a policy for DLT templates.
Yeah.
Right. So without that, you're not allowed to send SMSs. So similar kind of policies should come for WhatsApps and the likes of those. Otherwise, they also will not sustain for longer duration.
Right.
Because that's definitely, the customers now are getting a lot choosy, just unlock your screen right away,
Now
right?
we are on WhatsApp.
Unlock your screen right away and just see the notification. If it does not fill in your screen, you tell me.
No, actually, see, I'll tell you what. For us, I think the way you use WhatsApp is also a very important tool. SMSs and emails to a certain extent could, but that time and era was probably, we weren't there yet. But in WhatsApp, a lot of the analytics in the background gives you a lot of insight on how many people are blocking you, how many people are reading your messages, not reading your messages. To be smart about using WhatsApp as a medium is also a good way of actually, getting that data and then using it in a way where you can, channel your energies and your, communications in such a way that the customer feels is relevant.
Right.
I think maybe it will take a little longer for WhatsApp to go down the SMS path. That's my gut feel.
Customers are evolving faster than the technology.
True. You never know. You can never be sure.
That was my next question.
Very true.
Yeah.
But all I'm saying is that, from a lender's perspective, I think that the insight and the analytics that was available, which was not there in SMS and email, is something, that is something you can use to be more relevant. That's the only thing.
Yeah.
Time also when he's most active reading
Yeah.
your messages, which is not true in terms of SMS. So you exactly know, okay, this person responds or reads to your message at a certain particular time. So you can automate your messaging to him on that particular point of time so as to ensure that he reads it, right? Probably in the night, you might end up checking all your WhatsApp messages. And it could be promotional also, but you will still check in the night.
Yes.
That is the reason. Yeah.
I feel so left out now because WhatsApp is still has banned P2P globally. That's the reason they're not able to unlock it in India because this is another challenge wherein the large bodies are not able to keep up with the regulations. There's another challenge.
Yes.
WhatsApp being one of such. Ideally, in India, P2P is a regulated entity, so they should have come up with the right regulations at least pertaining to India, but they are not able to make that change because they are a global company. So first, customer is ahead of technology. And large technology companies are ahead of the innovative startups. This is another challenge.
So again, great conversation going on, but I'm sure my point is also to finish on time. So and then maybe we can take it offline. So I will take another last discussion points starting from what you said. The customers are evolving, and what Sangram said. The API is common, and where is the competitive advantage? So what I see sometimes, it's very difficult for us to understand because everyone talks about data analytics, low code, no code. We Google karte what it is and before writing the stories. So considering and given the fact that most of the NBFCs or everybody is using all these technologies now, and technologies, customers are also evolving, far better than the technology. How are companies, by using AI, machine learning, low code, no code, whatever, the technologies, are preparing for future? How are they building themselves for a future ready? Because they do not know the technology which they adopted will last for a longer time. What is it that they keep in mind, while adopting the technology so that they will be future ready? I want everyone to maybe take 1 or 2 minutes and answer this. Should be the last question, perhaps. You want to start, Deepesh, from?
So I think the evolution of Web 1, Web 2 and Web 3 sums it up quite well, wherein, the concept of Web 1 brought the idea that, the customer should have some digital mode of access to certain information, wherein Web 2 came in, and we told that, it's not just about access, it's also about interactions that the customer needs, right? Now, with this interaction, we've started giving comfort to the customer. And the third era that is coming with Web3, that is the era of trust. So I believe any technologies or any doesn't matter how many AI, ML, NLP, smart algorithms, whatever you use, if you can gain trust of your customer, the customer is with you. If you can't, you're no more. That customer is no more with you. So I believe focus on building trust with your customer don't harass your customer, bombard your customer with a lot of engagement or interactions.
Mr. Ghosh?
From an analytics standpoint or a data science standpoint, what Sangram was mentioning that, slowly the data is, while data is currently a challenge, and for an affordable housing segment, or for that matter, any loan lending company, the key challenge is that once the customer is onboarded, then your insights about the customer goes for a toss, because you don't really know what is happening in his life. Whatever documents he or she has submitted to you is at the time of onboarding. Beyond that, you don't have a track, except that you can, look at his or her performance in the bureau. That's it. But with the advent of account aggregators, OCA and ONDC, when the government brings in these platforms or frameworks, that will create a lot of data, and that will, at least ensure that the dearth of data in terms of customer performance, that is addressed to a certain extent. But then comes a new challenge then, when everyone is looking at the same data. How do you kind of, create that competitive edge? So where the competitive edge will come is where you apply again AI, ML on the customer interactions. So once a customer performance data is already on track, next thing that you will have to figure out, which Deepesh was mentioning, that you don't really get to see the customer's emotions. So when, let's say, you will come to a scenario where funds are easily available, BT out will become a key challenge. In that case, the customer stickiness will depend on how you are servicing the customer. So the interactions of the customer with every platform of yours, and as we kind of go into the future, the omni-channel difficulty will become more challenging. Today we are talking about WhatsApp. Today we are talking about any other platform, but tomorrow there will be 1,000 other platforms will come up, and you have to be on each and every one of them. So keeping your presence on a continued basis, giving the customer the interaction that he or she is experiencing in all other advanced platforms, that is where the key challenge will come. The delivery of the customer experience. And that will happen in a much more nuanced manner, because now we are talking about customer experience, right? How does the customer experience form? It forms from every interaction experience. So let's say, if I am, let's say, buying food from Swiggy, I'm just clicking on a food item, I'm putting it in my basket, and then I'm making a payment. 3 or 4 buttons I press, it's done. Right? Now, if I am trying to get a loan, if I'm trying to take a term insurance, that same experience is continuing in all other platforms. So if I have a suboptimal experience with a form element, right, with a commoditization of fund sources and everything, I might not even continue. So the customer experience has to be delivered with each interaction of the customer across all platforms. That is going to be the key challenge of future. And I'm not sure if that way any company is future ready at this point of time.
I think microarchitecture will be the best way, right? So if something goes wrong, you can remove and throw it out, and as long as APIs connect, everything should go fine. I think that will be a decent way to step ahead, because again, like you said, investing huge sums is always dangerous. So I always feel that a decent microarchitecture, like as soon as something new comes in, okay, this is not working, chuck it out, bring something in. I think that will be the great way. Yeah.
How do you deliver the front end?
So again, the GUI, like you said, okay, this is not working, let's throw this out.
Very realistic, yeah.
There are, like he rightly said, right, the technology decisions that you asked for, like how do you decide whether you are future ready or not? And I think the way you make the technology decisions, that is going to be driven by 2 E's, I guess. One is going to be efficiency. Is this any new technology that you implement or any new process that you implement, is it getting more efficiency? Organizations would want to adopt to that technology. Or is it improving the experience of the customer? So these 2 things, like the 2 E's, like he said, experience and efficiency will drive the technology decisions, because when you have to decide whether I want to change something or not,
right,
it has to have either an efficiency improving in your system, which is when you will take a call of changing it, or it needs to improve the experience. That's when you would want to decide to, just change it. That's how I think the technology decisions about adopting to newer technologies, most of the organizations would want to take.
I think I tend to agree with Dipesh. I think somewhere you have to build the trust. And we've realized this because when we deal in a project called education, it's not about hardcore selling. It's about, there's an element of consultative angle involved in it. What kind of advice, and that's when we work with our consultants, we actually say, hey, when you advise, you please follow a consultative approach rather than following a transactional approach. And I think if you've done that well, when you do in a loan granting process, what you do before and what you do later is very, very important. So before is something you get the buy-in, because loan decision is secondary. You give him a right kind of advice, and this is very, very emotional product education. Then you develop the trust with the customer that you were referred by a consultant who did the kind of advice which the kid needed. When you go down the chain, how do you offer him service? Because today when the kid goes out, Forex is needed.
Right.
Insurance is needed. In fact, we worked with an insurance company and said, we would encourage your parents to take insurance for 2 years so that when you are studying, something happens, your study doesn't get impacted. So that piece of offering, if you give, then along with it, the bank account service that we provide abroad, okay? These are some, so basically what I'm trying to tell you is you have to weave it in a single complete end-to-end solution. And also back it up with the trust angle that I said. That's going to give you will have enormous technologies. You can use technology at any leg in the entire journey. But how you put it in and stitch it into a process which delivers value to the customer and at the end of the day delivers stickiness is something is going to be really, really important. Of course, then that in a way, it's going to have cascading impact in the way you source. Then you start getting your referrals because students give a lot of referrals, and that's how I think the process of adopting to technologies happen. But the most important piece is the entire aspect of putting an end-to-end solution with trust built into it. And I completely agree with you. I think trust is one of the elements which is key in our financing services.
Okay, sure. Sangram will come to you. Let's finish this round and then we'll come to you. Yeah, Arupam is left here.
Yeah, so we all know challenges are there, okay? But the most important thing is that how can we overcome those challenges, okay? A very important point is that we are all aiming towards an automated, slick, okay, customer experience rich solution or journey for the same. But if something doesn't turn out, if the churn is higher, okay, if the stickiness is not there, then what are we going to do? Then comes the concept of what you are telling as a low code or from API perspective a SaaS on cloud solution vis-a-vis a on-premise solution where your GTM or go-to market will be higher. Right. So obviously want to go for a delivery cycle also where you can churn out new things, tweaks in your journey, new products, new modules in the lowest possible time possible. Like for an example, I have worked extensively in Newgen. Okay, so Rowan can only tell where Newgen was in 2016 to what it is now. There has been huge change. Okay, so from a fully code-based platform to a low-code now, config-driven to a possibly a no-code scenario in times to come. So everything is evolving. You have to also see your GTM. That is most important because you never know. You can plan 1,000 things into 100 R&Ds, come up with the best solution, but it may well not suit the customer needs. Okay, then you have to change also. So there are APIs from on cloud solution perspective comes, and from a delivery perspective, your low code platforms or your development agile solutions come into play.
Yeah, absolutely. As you rightly mentioned, the technology should support all those kind of changes because the market dynamics are changing so fast. The regulator is changing the rules so fast. So instead of, the point solutions, whatever, say for example, a point solution of an LOS, which is a hard-coded black box, it's difficult to change. So how the low-code framework will help you dynamically change those particular rules, change the forms and all those things, and faster go-to-market. Basically, that's how the low-code will enhance the experience of the definitely customer experience, the B2B kind of a market. Those are the additional parts of that particular solution as well. That is definitely required, plus a framework which is flexible enough to be changed at a very faster pace. Basically, that would be the key rather than a kind of a hard-coded black box which is very difficult to change a business rules and all those kind of things. That I think could be the that the lenders have to see before selecting any low code or kind of a framework basically.
So evolving framework.
Yeah, absolutely.
Nikhil?
Yeah, so like I was just saying the whole point about having your system set up in such a way that everything can be picked up and dropped out whenever we require, right? That's what we call I was telling a few minutes back about the backup nature. Is that you have to develop your systems in such a way that it talks to each other and everything is API driven. So if something doesn't work in tomorrow, you can just directly remove them out and throw it out. I think that's my 2 points on that.
Samir?
Yeah, so in addition to what I said is currently I think the way you architect your IT landscape is very, very important. And nowadays microservices have really come into play where you have many APIs coming in. How do you host it and how do you consume it is very, very important. And it also is a very, very key component to keep your cost low because you can't host every service in every application. So the way you architect your entire IT landscape is really the key right now. While technologies are available, many platforms are available, but how do you make it repetitive without an additional cost that you incur is very, very important. I think as companies, when we try to build a future-ready organization, the way you build your technology architecture and of course the customer journey end-to-end piece with data is very, very important. I think that's going to really change the way we look at things. There's one data point lastly I want to leave with. If you see my role currently, I mean, the thought there was how do you bring customer experience, data, process, and technology together. And these 4 pieces only leads to transformation. Alone technology, you may deliver it, but I don't know whether it'll have adoption or not. I think the role is mandate. I mean, the way it is moving is the product and technology are going to lead the way. And then the customer experience part with data. These 4 pieces are very, very key. If you have to address some of your operational expenses challenges, and at the end of the day, your customer experience metrics. So I would end up with says, try to look at these pieces holistically so that you are able to address some of the customer and internal challenges that you may face in future.
Yeah. So in my personal view, it's very difficult to predict how to be future ready in the next 3-5 years because the way things are changing, and I've worked across almost 6 NBFCs in the last 18-20 years of my career. And the amount of change I've seen in the way, we would dispense credit to, a place where someone would apply for a loan, you would have a huge pack of documents, you would assess, there would be judgment, there would be debate on whether the customer could be given X or Y. And then you would tell the customer, this is what we can give you, a term loan for X amount, that's it. Like it, not like it, the choice is yours, but the same. I think what's changed dramatically is the fact that now companies such as ours are open to tailor-made solutions.
Yes.
Because now we've been able to at least understand that, each customer's requirement is very different. And you can only get a customer or convince a customer when you're able to give customized solutions to him instead of the straightjacket approach. So I think that is what has changed dramatically over the last 15-20 years. How you deliver that on what platform you use or what kind of code you use, I think that is going to keep changing. The only important thing is that first organizations were always inward looking.
Right.
They would focus on that this is the system and the customer has to fit into that system. Now it's more of it is definitely outward looking. So it's like the customer wants this, and for this we need this solution. That has completely changed the entire landscape, and this will continue to change. So I don't think there's a right answer to say that I can predict what's going to happen 5 years from now.
Absolutely. So again, I think we discussed the journey, then the challenges, the technology part, the future ready or not, and I think whether we can put emotions, whether the API can be different, or maybe evolving framework, I think, and WhatsApp collection, I think, all remarkable thoughts. So I'm done, but before I wrap, maybe all of you can add maybe 30 seconds just, and a very, very quick questions to everyone, maybe as quick as possible you can answer is, so considering all this, where do you see yourself in next 2 years, or what are the major changes that you see in your company or your sector. And I think we started from here. I will start with you, Sangram. Now we'll go this way around.
So basically, to be honest, I don't know where I'm going to be in 2 years from now in the sense of what we are going to be doing. Because the way we're changing, and this change is happening daily. Policies traditionally would change, every year we would review a policy. Now it's a daily discussion on whether the policy is acceptable or not, whether we need to change it. Data, there's a lot of data that is coming in also. So honestly, the level of change that is happening is quite high. What I can say is that specifically for UGrow, this is something that I've learned now, is that the 2 years of effort that they had actually made in terms of conceptualizing a scorecard. We have a GrowXchange platform for co-lending as well. And we're kind of pioneers in co-lending. We have almost 30 odd relationships and we work both on the asset and liability side. So that was something completely unheard of. I mean, this is something that, we're working on very strongly. So I think we're going to continuously work on that competitive strength. The idea again, and it's not only me, I think for everyone is going to be on how to be different from others and how to continue to keep a competitive advantage. Why, for which reason a customer would come to you or a bank would work with you on the liability side. That's it.
Sure. Let's be a little quick. Samir.
Yeah, I'll just keep it crisp. I think 2 years, education is going to be a category in itself, predominantly unsecured.
Okay.
From our company standpoint, what we are looking at is the more you backward integrate, more you forward integrate, that creates the real value proposition, that creates the stickiness around, and you're able to drive inorganic traffic to your company. So I would see education being a category creation. I think, from a company standpoint, we look at backward integrating and forward integrating as much as we can.
Sure. Nikhil?
I think from a very IT perspective, I think zero ops is something that will be the near future.
Interesting.
Very crisp and clear on it.
Sure. Rohan, how do you see?
Yeah, definitely, low code, no code, that could be the key basically, even a framework which gives the lenders, how quickly they deploy the particular solutions. Then we have a solution accelerator approach, which is a ready to market solutions, which is 70 to 80% ready. So it gives you best of both the worlds, like like a point solution as well as the framework capabilities, plus the rule engine basically for the informed communication. So that rule engine coupled with intelligent communication would be the key, so that there is no bombardment of information which goes to the customer to irritate him basically. So that kind of a communication and all those things, we have built those particular things and we will improvise on that particular area basically of hyper communication basically. That's what I see in 2 years.
Yeah. Sure.
I think from our standpoint, next 2 years would be becoming an ecosystem from a financial services standpoint. We're a financial services conglomerate, and technology is coming first in all the things that we're doing, right? Well, it continues to be a physical model, but it'll get converted into an ecosystem. That's precisely why we have entered neobanking as well, because we would want to give the customer complete solution that a customer needs, right? In lending, one of the challenges is your touch point with the customer is only restricted to the loans that you've given. He's going to come to you back when he wants to pay an EMI. How do you ensure that you give him everything? Because once he's your customer, he should be within your ecosystem. I think ecosystem play is something that a strong ecosystem play in financial services is needed.
Great.
So
that's where I think the next 2 years for us is going to be.
Yeah, I'm sure. And there are a lot of talks for the neobanks for sure. Everybody wants to rebrand themselves as a neobank.
I think not just neobank, but and from an overall perspective, you want to give an entire ecosystem to the customer, right? Once he is your customer for all financial needs, he should be your customer.
Rupam, next 2 years.
Yeah, so from our company perspective, so we are set like we are going for a fully digital automated solution to the extent as much as possible or feasible. Okay. And from a technology point of view, as I told you, our fundamentals are strong based on the architecture that we currently have. And personally, I don't see too many challenges happening in the ecosystem and all, which will be causing a kind of disruption which we need to take care in the next 2 years. So I think we are set there.
So assuming that we'll be public by then, and assuming that the government initiatives like account aggregators, OCN and ONDC will be out by then or rolled out, I'll be primarily working on two things probably. One will be integrating these new frameworks, getting the data and building the AI on top of that. And the second will be the interaction AI. So, given that we'll be public, the investor expectations will be that, you make things more automated with lesser human intervention, which means the delivery of superior customer experience or customer service has to be delivered automated fashion based on the interactions. So in the interaction AI or the event AI, which is how you understand the customer's interactions with you, be it over a call, be it over an app, be it over your website, be it over anything else, and how do you build what the customer is thinking or feeling based on that, and then deliver it, even automated change of interface based on the customer's inputs. That will be the next frontier of AI, I believe, and that's where I'll work.
Sure. Dipesh?
Yeah, so just like Sangram mentioned, we also are into both segments, like being a P2P lenders. We also do not asset management, but investment as well as loans. So definitely now that P2P lending has become a sensation, right, of the town, we'd like to make it a habit from sensation to the customers in the next 2 years. And I believe since Meka mentioned excellent points on building an ecosystem, right? So since all of us are targeting to do same thing, right? So I believe we'll be working more towards building, an ecosystem by working closely with one another. Maybe it could be Meka, it could be Samir or Sagram, anyone, right? Let's see how we can collaborate together to build that entire experience for our customers in their journey or ours. So we'll be focusing more towards such kind of partnerships as well.
I think, embedded is going to be the future. Everything, every app will have an embedded future, whether it's embedded finance, embedded lending, embedded insurance. But embedded is going to be the future.
I'm sure. One thing for me is a lot of work for us because all of you will do so much. I can still tell you that when I, got into journalism in 2007 in CNBC, that was my first job. The only two kinds of stories that we used to do in banking was, repo rate transmission and the NPA. And the insurance side, the only story we used to do was ULIP. That's it. And today when I look at my juniors or the teammates, we are talking so much, so many stories, so many different stories, and we have to constantly evolve. So now I have been Googling about low code and no code and trying to understand how will it actually work. So, but thank you. And these are the sessions which actually helps us to also, understand and, reach out to our readers and viewers. So thank you so much, Dipesh, Mr. Ghosh, Rupam, Meka, Rohan, Nikhil, Samir and Sangram for sharing really meaningful, productive and realistic thoughts here and being part of ETBFSI's knowledge session. I wish you a great evening and once again, thank you so much.